Hello guys, good evening from here. I've been on the YouTube space, and I know, you know what I want to say, and that is I'm busy. But yeah, that is it. But you can be following me on Facebook because I have been active always on my Facebook page. I've been uploading some videos, and I've uploading some images and educational content. You can study right here. All right, so we begin. So today I'm going to be talking about a trade analysis, a trade setup that I shared with my mentees. I don't actually use the word signals. I don't like using the word signal, and I don't like using the word students. All right, so sorry for that. I say that I share a setup. All right, I don't give signals. I share setup, an idea that I have. Okay, so I share setup with my couple of friends that are in the mentorship, and it is on GBPCHF. So right here we have an example right here. We have it right here, and I sent it right here. You can see the date, and the date was on the 9th. All right, the May 9th, and that was what I sent the setup. And look at the beautiful delivery right there. Look at the beautiful delivery right there. So I'm going to explain it, and you can see, I know you can see that I marked the daily range right here. So we will go into our trade view, and I will get to explain the chart for you guys. All right, so we are on our trade view, and right here we have our GBP share. Okay, so I'm going to delete everything, and I'll start the analysis from scratch. All right, so we're on the daily time frame. So we will go up to the monthly time frame, and I will get to explain everything that happened on GBPCHF. Okay, so looking at GBPCHF, we can see that we are on a range market. So this range market signifies what? A daily range that we're having right here. Now, the most important thing is that I'm going to be marking a major swing high and a major swing low that are external. All right, so we have this high, and also we have this low right here. So this is like the range that we are inside. All right, we're inside this range high and inside this range low. So we are in a range market. Okay, so probably now, okay, let me first explain everything on the monthly time frame. So the first thing I noticed on the monthly time frame is that price took out area of support, taking out the sell side liquidity pool resting on this low. All right, so we have it take this one right here, and also we have it hunt this low right here, right? So after the hunt on those liquidity pools, you can see that the price rallied upwards, but then you can see that all these stocks are wicks. And I said previously that I don't like trading the range when it involves wicks. I like to trade when there's a full body candle, like I can easily read the daily range right there instead of all these wicks. All right, so now if you notice something, actually you can see that right here we are having the sell stocks protected. You can see the market is shifting bullish. You can see all the sell stocks is protected, right? And also we can see that on the month of April and on the month of March we have areas where we're having area resistance. So we're having equals to the high. So we have equal highs right there, which signifies that there is a pool of liquidity resting on the high, right? So that was on the 9th May that we sent that. So I'm going to analyze on the May. All right, so on August we mark our August highs and lows, previous month highs and lows. So we have this right here. So I am going to indicate that has previous month low. We have previous month low right here, and this one we are going to indicate this one has previous month high. And the most interesting part is that the previous month high has what? Areas of liquidity pool. We have the buy side liquidity pool resting on those highs. All right, and we can see that this low didn't take out this low, so it's like a shift in market structure. It's like a structural shift, right? So price you trace backwards. And remember when I talk about confirmation entry on the algorithm day range, like you have a structure and then you have a stop hunt. You wait for a structural break. You have a structural break and price return to the other block right there. and you can see that we use that on GBPUSD. I don't know if I shared it right here on YouTube, or I shared it on the mentorship, or I shared it on Facebook. So now we run down to the weekly time frame, and we keep analyzing right here. So you can see how clean it is right here. You can see our previous month low, and previous month low, it took like previous week low right here, because this is now the weekly time frame. So each candle signifies a weekly time frame. So we have a previous month low right here. We take our previous week low, and previous month low, all the previous month low was protected, right? So you can see that this the liquidity pool that it took out, right? And traded higher, gave us liquidity right here, which is area of resistance. So we're having tons of liquidity right now. This high, the buy side liquidity pool, right? So this previous month low, they take out this other low. So we run to the daily time frame, and it is now very, very interesting on the daily time frame. And what is that that's interesting? You can see the confirmation entry I talked about right here. You can see when the previous month low was created, it happened that it didn't take out this previous month low, right? But we just can't say that is a confirmation. We need to see a structural break of a external structural high, and it's an external high from what higher time frame or the 4-hour time frame. So you get to see me mention that or previous videos about algorithm that I said. I think I prefer looking at structural shift from higher time frame, which is the 4-hour time frame. So we now have that structural break right here. And the interesting part that we saw from the weekly time frame was that the first thing it did was what? A stop hunt. Alright, this is not a break structure. You can see it's just the wick that traded right here. It didn't close below, like, it didn't close below this low. You understand? So that is a stop hunt. Alright, so that is not a breaker structure. You should not consider that as a breaker structure. Now, after the stop hunt, what are we expecting to wait for? We're expecting to wait for a structural break. And that is what we have here. So we are having a break in market structure. So where's my break in market structure? See here. No. So let's just use breaker structure. All right. Now you can see that impulsive rally that occurred that gave us that structural break, right? And probably if you use ICT concept, you can see that price traded at 60% level, 8% level, right? But even though you're not using the Fibonacci, you can actually see that you are having an order block right here. The sell candle that were responsible to do it impulsively trade higher and break structure. It gave us a optimal trade entry right here, all right, and ride it higher again. So it didn't give a structural break. It didn't give us a bearish signal, and we now have this high right here, and then we now have this low, right? And the interesting part is that it also gave us an order block right here. So that is the POI where I share the analysis, the setup that we'll be looking for buys at the 4-hour time frame, and we'll target in areas where we have liquidity pool, which is this previous month high right here. Okay, so now running down to the 4-hour, I start to count the analysis and and my refinement was up to this area. I marked it to down close candle has an order block. All right, so but then you can still refine and choose only this order block right here. And those that trade supply and demand, they choose the last candle that were responsible for that impulsive move. So use your choice. So we now see the impulsive move that traded higher, and we not consider this as a breaker structure, but we're confident to buy at this POI because of what the analysis done from the daily time frame and seeing that price is buying from the daily time frame order block. You can see the order block right here, the area of demand, and you see the impulsive move rally that traded higher. Now we are confident to buy from here. Why? Because this is swing high, this is swing low, and a swing high, right? So we did not get to find any break structure, all right? And you considering this as a structure, this is not a structure, it is not a breaker structure, it is not a valid area. So I know you were looking, first of all, you're looking at this area has an area of demand, and it violated you because you also think it's a breaker structure, and you're saying this demand was responsible with breaker structure. but this is just a smart money trap. Okay, the origin of the structural break started from here, right? You can see this high, low, high, low, high, and you see the general character before this major external high was broken, and you can see that from your daily time frame where the other block is. All right, so normally you're also looking at this area of supply because you're like we have a breaker structure, price violated demand. So you are looking at this area of other block has an entry because you saw an imbalance, right? But what the price is, the price violated it, right? So remember in one of my videos I say that another block is valid if it violates another opposing other block, and that was what we see that happened right here. And if you go back and check the image I shared, uh, you can see that I marked this area right here, and that is the area of supply. So I'm saying that supply has been violated, and this demand right here was responsible to violate that supply. And you see the demand, the other block are marked up right here from their daily time frame down to the 4-hour time frame. So though we have here, and now we have to conduct our liquidity assessment to say price needs to take liquidity and withdraw to liquidity. So we have this right here, and also we have equals high right here. So we have liquidity that is a draw to liquidity. So price is very valid. That price should take liquidity and be drawn to this liquidity and be drawn to the long term liquidity where we have a double top equal highs right here, right? Now still otherwise price traded lower also and gave us another liquidity right here, gave us an adjustment. So price trade higher and it kind of like rejected from another block right here for sales, but it is not valid, okay, because we are still maintaining a bullish structure. So it's only if this low is broken and this low is broken, we know that we are bearish. But due to the fact that from our higher time frame, using the golden day range and the shift in market structure and the confirmation of what the previous mode did, so we are looking forward higher prices. All right, so we have the liquidity assessment done, and right here we have liquidity to take, it draws liquidity also. Now price tapped our POI. You can see it almost hit stop loss, but at the same time you can see what I marked as the area of demand was here and my stop loss was here. Now this is still huge, right? So go to our daily time frame chart, you can see right here, and also still yet if you go up to your daily time frame, you can also see the whole area for the block, and the whole area for the block is right here. All right, so the POI was at 4 hour, but then the other block was right here. So go down to the 4 hour and we still look at that right here. All right, so this is the 4 hour other block starting from this candle right here. It was the last candle. So the daily time frame tapped, that is the daily time frame other block. Price took liquidity, right, and it tapped here. Now the reason why this gave us an emotional damage, and it happens that we didn't take this trade for a long time, was that because if we take this trade and price start trading higher, we will actually move to break even, right? So price comes back, did this stuff right here, the algorithm did this stuff right here, range for a while, and this causes an emotional damage. And it happens to be that I can't find confirmation entry right here. So we are thinking that it might want to sell. But then after the emotional damage, what the price actually do? It rallied higher. And straight to the TP target. So it's just a short video analysis and explanation of the trade and everything. So I have another video coming up on how you'll be using Fibonacci with your golden day range. So that will be next time. So to then, take care and stay safe.